Welcome to the Zions Bank Economic Update. My name is Joseph Mayans, and joining me is Robert Spendlove to discuss the current economic conditions and the recent passage of comprehensive tax reform. Robert, why don't we go ahead and get started with the most recent employment report released by the Bureau of Labor Statistics, kind of to cap off 2017. What do we see in that report?
Well, the report was okay. It was a little bit under our expectations. The consensus forecast was for just around 200,000 jobs to be created. And what we saw was around 148,000. So it was lower than what we were expecting, but it's still a pretty good number. Now, for 2017, we actually saw a pretty good year. Overall, 2.1 million jobs were added, which is consistent with what we've seen in the last few years. An average of around 170,000 jobs per month. In addition, when you kind of look beyond just that top line employment number, the unemployment rate dropped down to 4.1% during 2017 from kind of the high 4% range and has stayed at that very low level for the latter half of 2017, so that's looking good too. We're also seeing good growth in areas like manufacturing, which is a base for economic growth. So we also saw a little more return of labor force participation, where we're pulling more people off the sidelines. Our underemployment rate has been dropping, so that's looking good too. Now, the one area that we're not seeing the strength yet is in wages and in inflation. Yeah. And we're just not seeing, even with good employment growth and low unemployment, we're not seeing that increase in wages yet. At least we haven't been, and we haven't seen increases in inflation to the degree that the Fed would like to see.
Right. I mean, it sounds like we had a pretty solid year in the labor market last year. And then Congress went ahead and they passed comprehensive tax reform, got it signed in December. What were some of the main provisions of that, and how do you see that affecting the economy going forward, or how is it currently affecting it?
So it is going to have a huge impact. It's the first major tax reform at a national basis in over 30 years, and it is a significant tax reform. The cost estimate of this is about $1.5 trillion. And there are a lot of different aspects of federal tax reform, but the two main parts are individual and corporate. And on the individual side, what we saw was a doubling of the standard deduction from around $12,000 to closer to about $24,000. That alone is going to have a really big impact. But then also, they got rid of personal exemptions. So, usually when people file their taxes, they subtract off those exemptions. Those are gone. So they also either eliminated or reduced a lot of the deductions on the tax form. So what we see is kind of a simplification of the overall tax system. Additionally, another one that's going to have a big impact on individuals is they capped the deductibility of state and local taxes to no more than $10,000. Now, it won't have a huge impact across the nation, but especially in areas that have high state and local taxes, like California, New York, New Jersey, it'll have a huge impact. But it's also going to have a big impact on a place like Utah, where while Utah doesn't have high state and local taxes, they do rely on federal taxes as part of the Utah tax system. So we could see a big revenue increase to the state of Utah from this. Now, on the corporate side, the changes are even larger. The biggest one is reducing the corporate tax rate from 35% down to 21%. That's going to have a major impact on a lot of industries. They also reduce the tax on repatriation, or bringing back foreign income. So that's going to bring a lot of money that's been on the sidelines in other countries back into America. They also changed the tax treatment of pass-through income. So small companies will see a big tax reduction. So there's a lot of different things going on. The big question is, what's the economic impact going to be? Right. I talked about the low wages that we've been seeing and the low inflation. Well, just in the last week or two, we've seen more and more companies coming out and announcing that they're going to be raising their wages. So companies like Walmart have said that they're raising their their base pay to $11 an hour and giving all their employees a $1,000 bonus. But while Walmart is just one example, we're hearing about companies all over the country that are returning a lot of these benefits to their employees. So that will, on the net, start to increase those wages like we were expecting, which will also start to increase that inflation.
Yeah. So do you see this in any way affecting the Fed's plan going forward? Do you see this kind of, businesses ramping up wages and bonuses? Do you see that continuing, and how do you kind of see that playing out next year?
So that's the big struggle.
Yeah.
We don't know exactly what the economic impact of the tax reform plan will be. There is a fear in the Fed that this could turn into an overheated economy. And this has been one of our fears for the past year. We knew that eventually wages and inflation were going to go up, but the fear was that they would pop, that they would go up dramatically by a large amount. And that could cause the economy to start to overheat. We could start to see more asset bubbles. The Fed is very concerned about asset bubbles in the current economy. Specifically, they're concerned about equity markets, the stock market, and they're concerned about real estate markets, that they've been increasing too much. And on the other side, part of the problem is while interest rates today are higher than they were a few years ago, they're still very low by historical standards. And so by having very low interest rates, essentially what borrowers have is very cheap money. And so that can lend to that overheating and lend to those asset bubbles. And so we may see the Fed getting even more aggressive in increasing interest rates. They've said that they're going to raise them 3 times in 2018 by 25 basis points each time. But if we start to see signs that the economy is picking up very quickly, we may see an acceleration in the Fed increasing interest rates. So it's going to be very interesting to see what happens in 2018.
No, absolutely. It'd be interesting to see how the tax plan kind of works out for everybody.
Yeah, absolutely.
So, thank you. So thank you for joining us for this economic update. For more information and analysis, please visit zionsbank.com/economy.